Now you know you're in a cool place when they're playing the Smiths.
I pay for it.
Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, today we're going to talk about a stock, UPS, that I used when it was trading at about $170. Now, at the time, I bought the stock and I wrote an at the money covered call, never expecting to still have my shares some 3 trades later. Today I want to show you how I use stocks like UPS for multiple covered calls, how I track all of my profits, and what the plan is going forward. Because right now UPS is trading right around 170, and that is my cost basis for the shares. Now, have I made money since I've owned it? Yes, I have. But first I want to talk to you about how much I use for all of my selling premium trading. This has been a question that I get all the time. And over the past couple days, I've really worked hard to try to pin down how much capital I use, because it's really a rotating number. Each month I'm using different stocks. So this month I really wanted to come up with that number for my members, let them know exactly what I'm using so they can kind of base their trading and possible expectations of what they could make from what I use. I'm going to show you that today. We're going to start off by answering the question, how much money do I use? Now, this might bore some of you. We're going to get to the trade. It's probably about 5 minutes down the road here. Over the past couple years, I would typically take all of my closed stock trades and I would take the combined capital used and represent that as what I use for that month selling premium, making the money that I make. Well, over the past couple weeks, I've been thinking about that, and that does not represent what I use. And this is going to be the best example to really clarify why I'm going with this new way of showing how much capital I use. Say, for example, I have VLO in my selling premium portfolio. And say VLO is trading for $129,000. That's my cost basis. That's the money I've invested. That's the money I use. Here's the deal. I'll use VLO many times during the month. Say I use it 3 times. Am I using VLO 3 times in a month? That equals $387,000 in capital used. Well, that's what I thought. I've decided now that we're going to go with what I paid for VLO. Because at the end of the day, that's what I have. I have VLO at $129 a share, and I'm just using it multiple times. What was the original investment? It was $129 a share. It's not $129 3 times. So that number is skewed. So what I did is I took all of my selling premium investments and I calculated all of their cost basis. And that's the number that we use when I outline to the members how much capital I use for selling premium. So right now, to answer the question, right now with my taxable selling premium portfolio and my non-taxable IRA, I'm using about $450,000 in capital to generate the profits that I show you here. We still have 6 days in the month of June. I have generated $15,528 or 3.45% on money invested. Now, I'm going to make some trades on Monday where I close about 3 to 4 trades. That's going to boost this up an additional $1,500. So this number is going to change. This is the breakdown of where I'm at right now. You could see I have open trades for covered calls, cash secure puts. I have poor man covered call trades that I break out individually so my members can see when I'm using stock or when I'm using Leap's call options for my covered calls. And I also share with the members what I'm trading in my kids accounts. Now, the kids accounts are generally about $10,000. These are my kids account. So I always show the members those trades because those are smaller trades. And as you can see, they generate anywhere between $300 to $500 a month. And we have been doing this for the past 3 and 4 months. And I tell you, sometimes we can make as much as $700 and $800 a month, depending on the stocks we pick. So the members get to see that. Also, they get to see all the closed trades and how much I've made. And as a little bit of a teaser, all my members see exactly my cost basis for all of my positions. And yes, there's some red trades in there. But what I'll tell you is this. We use the tools in our toolkit to achieve the goal. And whether we're up or down on those shares, it does not matter. I think what the members really get to see is how I manage positions that are down. That is the biggest thing, where I am down potentially some $20 a share on some of my stocks. I've had them for over a year, and they're absolutely a reminder of being kicked in the nads. But look, we stay the course, man. We do not turn away and hope it all works out. Let's go ahead and get to that UPS trade. If any of this interests you and you want to be a part of the membership, I give you 1 free month. Look, man, there's not much of a commitment. You like it, you stick around. You don't like it, you move on. And I don't needle you to stick around. You're either in or you're out. Go to cptdashboard.com, click Upgraded Dashboard, and get your 1 free month. I don't know what you're waiting for. I am a successful, active trader spinning at least 13 to 14 trades a month, and they have all the tools that I've provided for them and all the exclusive videos that you don't see. Look, at the end of the day, it's like 49 cents, man. Like your first cover call trade would absolutely cover a year's worth. CPTDashboard.com, click Upgraded Dashboard. Would love to welcome you aboard. The membership's been going strong for 3 years. I'm telling you what, man, I've had so many people come and go, and that's completely fine. But you know what I have? I have members that have been with me all 3 years, and they tell me I give the membership away with what I charge. It keeps me in the game, and it keeps me evolving to be better. What you're seeing right here is my spreadsheet that I keep all the records of my trades, every single trade. So here's UPS for an example. So you say, why do you need this big old spreadsheet for one trade, UPS? Well, I keep track of every data bit so I can then take that data, put it into various templates, and send to the members so they can see the breakdown. And that's what ups the game. So this is sort of my back office here with this UPS trade. And again, I have one of these for every single trade just so I can calculate how much I've made over the time frame for which I'm trading the stock. And I can also see when I'm profitable. Let's go ahead and look at UPS right here. So I bought UPS shares at 170. You can see it right here. And we bought that last month. We bought 300 shares. We've invested $51,000. So immediately I wrote a covered call. In fact, let me show you what I told the members when I made this investment. So this was the initial trade. It was back on May 19th. I bought the shares at 170. I let the members know right here exactly what I did. This was a Seeing the World Through My Eyes video where we talked about why I like UPS for a covered call right here. These little videos here that I do for the members are about 7 to 12 minutes. And we cut straight to the chase. Absolutely love it. We talk about why I believe this would be a great covered call for me. And if you were interested, you could do your own due diligence and maybe get some skin in the game. Well, this is exactly where we're at on this trade. UPS was trading for 170.43. I bought the shares at 170, so I did a 170 strike, and I knew I was giving up 43 cents on the shares, but I was able to pick up $5.70 in premium. And I did 3 contracts, and it was 42 days. Now, ultimately, I end up buying this option back. It didn't go to expiration. I bought it back because UPS did exactly what I said it was going to do in the video here. We were able to buy that back. We ended up pocketing on that trade $621. And as you can see, we did it again for $700. And then the current trade right now is $1,227. Now, again, if my shares are taken away, I lose what seems to be about $213 on the shares if they were taken at 170. But look at all that covered call premium I would have made. And I'll tell you, it's a 5% investment. So we're managing the trades. We're being active with the trades, but we don't do one and dones. I absolutely love spinning these plates of profit. UPS is a tool in my toolkit, and I'm going to use it as many times as I can as long as I own it. Let's go to the charts right now, because what I want to show you is this. I believe I have another opportunity to get involved with UPS because it's currently trading right where I liked it then and where it's trading now. Notice I talked about UPS selling off with the rest of the markets in that video. And the one thing I noticed was that it based right here at that 166 number. And it's so apparent that Wall Street First of all, when it uses support lines for UPS, it truly uses them. I mean, look at that. Every single time it hit that one line right there. And to me, I think it was creating a new line of support. What ends up happening is we get some bad news from FedEx, and I think we get the strike talk at UPS. It starts to spook Wall Street. So this thing tails off, and we find ourselves in the mid 160s. Well, it starts to find a home down here, and I absolutely love how it found that home around 67, 68. So that's going to offer an opportunity for us. When the stock was testing resistance right here, that's when I show the members that if it breaks that line, we could be headed higher. And I knew it was going to break that line because UPS pays such a huge dividend. The dividend was coming, so Wall Street wants to be a part of that huge dividend. And if sure enough, you get a little bit of momentum in the stock, it starts to move higher, and look where we went. We definitely went to 180. Now, in between that, we had some ups and downs. I was able to write a covered call. It fell. I bought it back. I went ahead and wrote another covered call. It moved higher. It fell down. I was able to buy it back. But this recent run-up right here had me dialing up a buyback and possible sell of the shares early. Now, to do that, you have to make sure your time value in the option that you're buying back is minimal, and it never got there. It got as high as 180 in this current run. And if we go back and look at where it was trading when I wrote the covered call, it was trading around 169. So this thing moved almost 11 points. So UPS is popping. And I believe my shares are going to be taken away. They look like they may not now. And in fact, and here's the beautiful thing, it's trading back to where we started. So the one thing I told the members is this: we're either going to 150 or we're going to 200 with UPS. That's my opinion. The strike news is that big. If they go on strike, you could bet Wall Street's going to sell them off. That's just the way it is. Uncertainty, Wall Street hates. Now, if they get any sort of good news and they avoid that strike, I believe UPS is one of those great S&P type companies that pay such a big dividend. They have such a consistent business model. This thing, if the markets play favor, is just going to find itself floating, and it might be floating higher. And again, we're looking for 30-day windows to write covered calls. That's one of the things I always tell the members. We want to be getting involved in these stocks when they're trading at the lower 25%. And that's when we get involved. There was no trade alert sent from me when it's trading here. Okay? It gets sent down here because it gives us more likely chance to be successful, right? So when I send out all my trade alerts, that's usually where we're at. So let's go ahead and run some numbers if I buy this option back on Monday, which I'm going to do. So right now, the option is trading for $2. Let's go ahead and plug in $2 on the buyback and see what my profit will be. And sure enough, it's going to be $627. Look where the stock's trading. UPS has traded almost nowhere, and I've been able to collect 3.42%, even if I have my shares taken away at 170, for which I lose money. This is the power of selling premium. I try to tell people this around the world, that we can own a stock that literally does nothing, just churning the covered calls until the shares eventually get even. And then if our shares are taken away at our cost basis, we've generated all that free cash flow. Selling premium allows you to generate cash flow so you can own the position and hope that it goes higher and the trade comes clean, and you're generating cash flow along the way so you can live life. So right now with UPS trading essentially at 170, I'm going to be able to come in on Monday and I'm going to buy this option back. I got paid $4.09. It's currently trading for about $2. We're going to buy that back. We're going to put 627 crisp dollar bills in our pocket, and we're going to turn right around. We're going to roll out of the current position, but we're going to roll out in the expiration. So the expiration for this trade was July 7th. Well, it's currently June 25th. So if I could push this out to July 25th, well, we're going to probably collect what? Another 30-day fat covered call on UPS, which will probably pay me about $5, and I'll get my 170 strike again. And when you do the math on that, just look at how much I picked up the stock. Let's fast forward and kind of role play. If the stock is taken away from me at 170 and we get the $4 to $5 premium on the next trade, we will have collected, and we'll just use $4. We've collected $4 on the latest covered call trade that would expire, have my shares take away on July 21st. That's $4. Then I picked up $2, $2, $2. So we're looking at picking up some $10 on a stock that hasn't moved anywhere for me. I literally bought it at 170. I'm selling it for 170, but I put $10 in my wallet. That's almost $3,000 on a stock that never moved. That's the power of selling premium. And we do it all the time. And we stay the course, whether we're up, down, does not matter. We keep selling premium. We sell, sell, sell. Our investments need to continue to work for us. And for me, they bring in dividends and I sell premium against those shares. Now, the takeaway on this video is this. You can use a stock, sell covered calls at your strike price, and as the stock moves up and down, you could have your shares taken away, making max profit, get your money back for the shares that you invested, and you have the covered call premium. Maybe even collect a dividend along the way if you did it right. If the shares move lower, they become nothing more than just tools in the toolkit to achieve the monthly goal. And we pull that tool out every chance we get, because at the end of the day, our hopes is that the stock will cross our cost basis. We can then have our shares taken away. We can wash our hands, have a clean trade. We move on. Staying the course, selling premium, whether the market's good, bad, or indifferent, we keep generating cash flow. Go to my website, cptdashboard.com, collect your 1 free month. I'd love to welcome you aboard. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.